Hello and welcome to Princess Dammy's Mind. You're listening to me from MTM Studio in London. My name is Princess Dammy. Today I will be teaching my daughter Becky business studies. This is just a home study for Becky, and it's just one way I do help her to study. So Becky can revise business studies even while she's walking to school, because she could put on her headphone to listen to me rather than listening to secular music. And Becky could also watch this video on YouTube while revising in school or at home if I'm not too busy to attend to her. So Becky could share this video as well with our school friends who might need help in this subject. And if you're watching this program today, it might be that you have a business and you want to learn a little bit about business, about what I want to talk about today, because you've already seen the title before clicking in. So I'll be talking about revenue, cost, profit, and different aspects of business studies. So I believe this program is for people that are like into business, wanting to go into business, or people studying for Gcse business studies. But this is a special program, specially designed for my daughter. So enjoy as well if you can. All right, Becky, before we start, I want you to grab some popcorn. I've already made you some homemade popcorn. Like you know, I don't buy popcorn for you from stores because they have additives in there. But this popcorn I've made for you is from home, so you can as well just help yourself to eat. So get some refreshment, settle down, pause this video, and you can come back to listen to me. So Becky, today's topic is about revenue, cost, profits, and break-even analysis. I'm sure you've been taught this subject in school, but perhaps you don't really understand this. So I'm just going to go over it for you to have a thorough understanding of what it is all about. There's no rocket science about this topic, okay? All I want you to do is to relax, have an open mind, because you're going to be learning new things, all right? So Becky, today you will be learning about different types of cost, how to calculate them, and how to use this cost to determine the break-even point of business output, which determines when losses and profits could be made. I'm going to repeat that. Today, Becky, you will be learning about different types of costs, how to calculate them, how to use this cost to determine the break-even point of business output, which determines when losses and profits could be made. So I'm sure the new word that you may not have really heard of is the break-even point. But today you will understand what it's all about, okay? Now, so the aim of today's topic, Becky, is by the end of this lesson, you should be able to understand different types of costs that business incur, like the fixed and variable cost. Then you will be able to understand and calculate revenue. You will be able to calculate profit. You will understand the difference between revenue and sales. You will also understand how to calculate break-even point. You'll be able to draw break-even graph or chart and how to explain the graph. You will also understand why business use this cost and break-even point to make decisions. Okay, so it's about helping business to make decisions. All right, so whatever we're going to do today is to help business to make decisions on the cost, on how much money is coming in for them. So there's no rocket science about this. So just let's start and you will understand exactly what it's all about. So Becky, first let me explain the reason behind today's lesson. So let's go, follow me, and we will go there. Rationale, or the reasons behind today's lesson, is this. The rationale behind today's lesson: business needs to know how much it will cost them to produce their products so they can know if they can afford it or not. So invariably, they want to know how much in total everything is going to cost them to make products, whatever products they're making. Okay? Then business needs to know at what point would they start to make profit or make a loss. So when someone is in the business, they want to know, well, I'm going to put my money into this business, yeah? And I would like to know how much it's going to cost me. Okay, now I know how much it's going to cost me. I want to know when I'm going to start making money, that is profit, from my investment of putting money into the business. Or am I going to make a loss? And if I'm making a loss, at what point am I going to be making a loss? So those are the kind of things business want to know. Therefore, they want to know how many units of their products they will need to produce to start making a loss or profit. And that's where the break-even point comes in. Okay? So today we're going to be learning how business determines the point at which they're going to be making a loss or a profit. And of course, they want to know how many units of their products they will need to produce and sell to break even or to make certain amounts of profit. So for instance, if they're aiming to make, let's say, £100,000 of profit, if that is what they're targeting, they need to know at what point they will be making that profit. How many of the units will they be able to sell and at what price would they be able to sell them for them to be to actualize that kind of profit they're aiming at. Okay, so all these calculations and analysis help business to make decisions on how to spend their money on production and how to decide the level of profit or growth they can achieve. Also, it will help them to be able to come up with almost an accurate calculation of cash flow forecast. So everything is about cash flow forecast as well. When they know how much money will be coming in, how much money will be going out, then they will be able to do their cash flow forecast. So without them being able to know all these things, they can't actually do the cash flow forecast that I taught you like a week ago. All right then. Anyway, so let's go. So now you're going to learn the relationship between revenue, cost, and profit. How to calculate each one of these costs and how to use the figures to calculate break-even point. How to draw the graph and how to even explain. But today I'm not going to actually teach you how to explain, but that's going to be in the next video. Okay, so but today we're just going to do calculations. Yeah, so you're going to know the relationship between revenue, cost, profit, break even. So let's just assume that these things are family members. Revenue is related to cost is related to profits is related to break even point. So let's call them just a family unit. Okay, because they are all related. All these figures are interwoven. They are related. Okay, you can't separate one from the other. All right, if you want to calculate revenue, cost, profit, break-even point, you need all these items one way or the other. Okay, so that's where it is. Now, sales and revenue. Let's first talk about sales and revenue. How are they related? Sales, for you to be able to calculate sales, yeah, all you need is just the number of units sold. For instance, if you're selling computers, let's say you're selling computer, or a business is selling a computer or selling computers, yeah, for them to know the number of sales they've made, yeah, they just need to know the numbers of items, the numbers of computers they've sold. So let's say they've sold 20 computers, so the 20 computers is their sales. A lot of people mistakenly think sales is in monetary terms. Like they say, oh, how much have you sold? I've sold £20. That is wrong. You cannot use monetary terms to express sales. Sales are usually expressed in number or units sold. rather than in monetary. You can't say, oh, I've sold 20 pounds. No. How much is your sale? Your sale is your unit that is sold. So if I say, how much computer have you sold? You can say, oh, I've sold 300 pounds computer. No. Your sale is, if you sold 20 computers, you just have to tell me my sale is 20 computers. The 20 computer is your sale. Okay. Then the difference between sales and revenue is, the revenue is what is expressed in monetary terms. So if I now say to you, how much is your revenue? So your revenue, that is how much money do you make from selling your product. So that's going to be when you apply the price of the price per unit times the number of units that you've sold. That's going to be the price that you're charging for each item times the number of sales. Yeah, that is number of units sold is your sales. So you can see the relationship now. So if I put in somewhere here, let me see if I can put something here. So down here, we can say something like sales. Yeah. So if you want to, so this can be expressed like, in sales, like number of units sold equals sales. So you can just say something like revenue multiplied by price. So price, yeah, multiply by sales. Sorry, love. Multiply by sales, yeah, equals your revenue. Equals your revenue. Where's my equal sign? That's it there. Yeah, equals revenue. That's another way of saying it. Okay. Revenue. So invariably, we're saying the same thing. Okay. If I say price per unit times number of units sold equals revenue, is the same thing as saying price times sales equals revenue. So revenue is the amount that comes into the business. That's the amount received for sales. Okay. So if I say how much did you make for selling your product, you're gonna say my revenue is, let's say, 300 pounds. So let's assume for this example that your price, let's assume that the price per unit for your computer is 20 pounds. Okay. Let me just put 20 pounds there. 20 pounds. And you have sold you have sold 100 computers. Yeah, you've sold 100 computers. You sold 100 computers. Yeah, 100 computers. You can see that I put computers in there because it's not monetary, is in unit. Yeah, that is the unit. The unit you sold is 100 computers. So now your revenue is going to be equal sign there. So this is your calculator. That is 20 times 100 that you sold there. So that is 2,000 pounds. So you've sold 2,000 pounds. So the 2,000 pounds is your revenue. £2,000. So this 12,000 pounds becomes your revenue. Okay. So as you can see, sales here is just number of units sold. It's not the amount sold. It's just the number of computers you sold, which down here is 100 computers. The price, when you add the price, when you multiply the price with how much it's being sold, that gives you the revenue. So you can now see the relation between sales and revenue. So for you to be able to calculate revenue, you need the number of sales, yeah, which is the number of units sold. You can see the relationship. So without putting the number of units sold here, which is the sales, you can't calculate the revenue. Okay, so that's the way it is. Okay, now let's keep going. Now, the next one I want to talk to you about is cost. Yeah, we have cost. Cost is the next one. Remember, we said we're going to be talking about revenue, cost, and profit. Okay, so we've talked about revenue here. Now we're going to talk about cost. Now, every business have two different types of cost. Fixed cost, one called fixed cost and the other one called variable cost. Everyone has fixed cost and they have variable cost. Okay, so now what is fixed cost? Fixed cost is is what is the spending or the amount of items or whatever the company needs to pay for their outgoings, which is the cash outflow that is fixed. Okay, remember we have cash inflow, cash outflow. So cost belongs to the group of outflows, cash outflows or business outflows, spendings, expenses. So the expenses are broken into two: fixed cost and variable cost. Okay, so fixed cost do not change. That's why it's been called fixed cost. Do not change. It doesn't change. It remains the same regardless of the volume of production. Therefore, it is fixed. So no matter how much production the company makes or produces, whatever they're producing, the fixed cost remains the same. Examples of fixed costs are rent. When a company rents a building or a factory to do the production or provide the services, the rental is fixed because the landlord will say to them, it's going to cost you £1,000 a month to rent this place if you want to do my business, and that will just be it. The landlord is not going to come back and sorry, and your rent is going to increase or whatever, or it's not so. But even if the rent is going to increase, it's not going to be immediately. It's going to be like, maybe they'll be giving notice, maybe 1 year notice or a few months notice to say the rent is changing. So this kind of rental, business rate, rent, building insurance, business accountants, they are like fixed costs. They are fixed costs. They don't change. For instance, when a company hires a business accountant to help them to do their accounting or whatever, to submit the paperwork for the government, the accountant will say, I'm going to charge you £3,000 to do this account for you. And that will not change because it's going to be fixed. Even if the company is making more productions, producing more goods, more whatever, the amount the accountant is going to be getting remains the same. The accountant is not going to be looking at the production level of the business to say, well, because you're going to be producing more popcorns, or you're going to be producing more computers, then I have to charge you more. No, the accountant is just going to say, my service fee is £3,000, and that's just it. The same thing goes with the building insurance. When the building insurance is when the quotation for building insurance is given to a business, that's going to just be the building insurance for the whole year. Okay, then the same thing happens with the business rate when the council charges a business rate is fixed. They don't say, well, because you're gonna produce more or less, we're gonna have to increase it or reduce it. So it is fixed. That is why this kind of costs are fixed. They don't change. They don't change according to the volume of production. They don't change because of any reason. They remain the same. Okay, that's why it's called fixed cost. The second category of cost is variable. This cost changes. This is why it's called variable, because the cost varies. The cost varies according to the level of production. So when business increases the level of their output. If they're making 20 computers before and now they want to make 50 computers, yeah, the cost will go up. Why is that going to be the reason? The reason being that they will need to buy more materials to make more computers. They will need to hire more staff to make more computers. That is why the cost is going to be going up. Okay, so if the unit of production or sales increases, the cost too will increase. If the level of production or sales decreases, the cost too will decrease. So this variable cost varies according to the level of production. When production goes up, the cost goes up. When production comes down, the cost comes down. Example of variable costs are raw materials. Like I've just said to you, raw materials. The more you produce, the more raw materials you need. The more you produce, the more people you will need to help you to do the production. So if 20 people are producing 20 computers before, definitely they will need more people to produce like 100 more computers. Okay, so that's why the wages will go up, the raw materials will go up. So to calculate variable cost, yeah, this is what you have to do. Variable cost of a single unit produced times total number of units produced equals variable cost. So now, to be able to calculate variable cost, you need to know how much it's gonna cost the company or the business to produce one item of the computer, for instance. Okay, then you multiply that with how many they want to produce. So for instance, let me put it somewhere here. Let me see if I can insert something here for you. I want to give you sorry. Okay, this is a year. So let's say the company the variable cost to produce one item is £10. Yeah, and then the company wants to produce 20, or let's say 200 units of computers, for instance. Okay, and that will give them, so it's just gonna be 10 times 200 units. Yeah, 10 times 200 units. Sorry, my computer is playing up there. Yeah, so it's gonna be 10 times, is it 10 times 200 units? Yeah, that gives £2,000. Yeah, so £2,000, one more time, is gonna be the variable cost. So the variable cost will be £200. Yeah, as you can see there, the variable cost is £2,000. £2,000. All right, so that is how to calculate variable cost. So the amount that was going to cost them per unit, that's £10 per unit. That's £10 per, producing one computer, times, multiply by 200 computers, and that gives £2,000. So that's how to calculate variable cost. Okay, but sometimes in an exam they might just give you a figure and say variable cost is £2,000. You just have to use the figure without needing to calculate it. Okay, now, so this is where we have to calculate variable cost. All right, now let's keep going. Now, the next thing I want you to do is to let's go into total cost now. Now, when a business needs to know how much everything is going to cost them, that is called total cost. They want to know how much everything is going to cost them. So that is called total cost. The total cost is just fixed cost plus variable cost. So which is fixed cost here plus variable cost. The fixed cost, which is the cost of rental, business rate, business insurance, business accountant, plus the raw materials, which is a fixed cost plus the variable cost. That gives it to total cost for production. So that's all. No, there's no rocket science about this. It's just total cost equals fixed cost plus variable cost. Sometimes in exams, in most cases, they're going to give you the fixed cost as a lump sum. They will give you variable cost as a lump sum. Sometimes they might just give you stories like, a business has blah blah blah. They give you a list of their cost, and they will expect you to actually identify which one is fixed cost and which one is variable cost. By so doing, you'll be able to group them in these two categories: fixed cost, variable cost. Then you lump them together. You sum them all together, yeah, and then you give them a total, and then total of this, total of that, lumped together gives you the total cost. That's just it. Honestly, that is just, there's no rocket science about that. Okay. So now, whilst we've calculated total costs, we need to calculate profits. Okay. We need to calculate profit. So let's go and calculate profit. Now you've seen how to calculate revenue and cost, because revenue is made up of price per unit multiplied by the number of units sold. Invariably, let's say sales. Yeah, units sold, it gives you revenue. And like I said to you earlier on, this could also be called sales. Yeah, they might just give you a sales figure and say, no, somebody sold some, and that's it. Yeah. So, but sometimes they might not say sales, they might just say number of units sold is blah blah blah. Okay. So revenue is made up of price per unit times number of units sold, or times multiplied by sales. Okay. And you already know that cost is divided into two different categories: fixed cost and variable cost. And you need to learn usually what comes under fixed cost and what comes under variable cost. Yeah, because it might just give you a list of items, and they will expect you to put them in different categories and then come up with the figures. But sometimes it might just give you a lump sum figure and say fixed cost is £1,000, variable cost is £5,000, blah blah blah, and then do the calculation. But to be able to work out your profit, yeah, you need to work out profit. Why do we need to work out profit? Profit is the amount by which a business revenue from all it says exceeds its cost. So when a business makes profit, when it makes more money than it had spent, okay, the company or the business makes profit. It's called profit. That is gain. Yeah, profit is called gain. What business gain after they've invested the money into their business operations. After they've spent the fixed cost and variable cost, what do they get? Sometimes they get something called a loss. Yeah, sometimes they get profit. But right now we want to talk about the profit. How do we calculate profit? So profit is calculated by the amount the business receives from selling their product, okay, which we call revenue. And revenue is made up of the price multiplied by the number of units sold, which is the sales, minus the amount spent. And the amount spent, which is the cost, is a combination of the fixed cost and the variable cost. So you can see now that it's no rocket science. So to make a profit, the revenue, the amount they received, has to be higher than the amount they've spent. When revenue, which is this one here, is higher than cost, then profit is made. So now let me just put in a figure here for us, yeah, just for analysis sake. Let's just do some calculation here. Let's calculate profit. Let's say here the company received from sales £8,000. £8,000, and the company spent £5,000 to make all its productions, to produce whatever is producing, let's say computer, £5,000. Okay, so as you can see at a glance, £8,000 is higher than £5,000. Yeah, isn't it? So if you put your minus figure here, that just like we have it there already, minus. So if you minus £8,000 from £5,000, yeah, you're gonna get £3,000. Let me put the equal sign here. All right, equals, so 8,000 minus 5,000 equals £3,000. So the £3,000 becomes your profit. Okay, so the £3,000 becomes a profit. Why is it profit? It's profit because the company or the business has made more money than it had spent. He made £8,000 and he spent £5,000. So the profit is £3,000. But in some situation, a company might make a loss when revenue, which is this one here, is lower than cost. So let's put another figure in there. This is a profit there. Yeah. All right, now let's assume the company is making a loss. Yeah, let me just put loss here. Let's calculate loss. Just for the sake of this analysis, let's say loss there. Okay, so the loss will be, let's say the company, let's just bring the figure the other way around. Let's say the company makes £5,000. Yeah, from sales. £5,000 from sales. All right, and then the company, it cost the company, let's say, cost the company £1,000 to make the product. Yeah, if you minus so if you minus £8,000, if you minus £5,000 from £8,000, you can see this is lower than that. Definitely they're making a loss, and we will say they make a loss of £3,000. So that will be, let me put equal sign there, equals 3,000 a loss. So we express loss with a negative figure. Okay, £3,000. So I'm gonna say minus £3,000. You put a minus there because it's a loss, because they've made a loss. All right, so the difference between these two figures, even though this is £3,000, this is £3,000, but this £3,000 here is a profit, but this £3,000 here here is a loss. Okay, it's a loss. So in summary, I've put it down here for you. When revenue, which is this one, is higher than cost, then profit is made. That is, when business makes more money than it has spent, there's a revenue. When business makes when business spends more than it's getting, then it makes a loss. And that is when we get negative figure there. Okay, so this is called a loss. So I'm just gonna put loss down here. Actually, it's made a loss. I'd already put it there. Loss, let me just underline it for you. Loss is made when the amount spent is higher than the amount coming in. Yes. And here they make a profit when revenue, the amount that comes in, is bigger than how much they spent. So that's just it. All right. So that is just the way it is. All right. All right. Now I'm gonna copy this page onto another screen for you because I don't want to lose it, so that I can then just get rid of what I have put in there. Okay. So I'm just gonna copy this over here, that slide there. All right. All right. So now that I've copied this, I'm gonna get rid of, so that you have you'll be able to have a clean slide. So now, so I'm gonna get rid of what I put down here. Okay. All right. So you can see that it's not a rocket science. It's so easy to calculate, but you just need to understand the concept of business studies. You need to understand what the business or the entrepreneurs are trying to achieve. They want to know how much they're spending in totality. They want to know how much fixed cost is their fixed cost. They want to know how much the variable cost is. They want to know the total cost, everything in totality. And then that's just about it. Now, so this is back to what it was now, and I've given you this as well, which is the calculation we made. All right. Now, the next thing I want to show you now is to recap on the rationale behind today's lesson. Yes, I'm going to recap. So business needs to know how much it will cost them to produce their products so that they can know if they can afford it. That is to know their total cost. Business needs to know at what point would they start to make profit or make a loss. Therefore, they want to know how many units of their product they will need to produce to start making a loss or to start making a profit. And that is what we call break-even point. And of course, they want to know how many units of their products they will need to produce and sell to break even or to make certain amount of profit. So this determines the revenue and the profit. All these calculations and analysis help business to make decisions on how to spend their money on production and on how to decide the level of profit or growth they can achieve. Also, it will help them to be able to come up with almost an accurate calculation of cash flow forecast. Okay? Now that we understand that, now we're going to go to another slide, which is this. So Becky, so now the next thing we have to do is to calculate the break-even point. This is a point whereby the business is neither making a loss or making a profit. This is where the total cost of the production equals their revenue. Total cost equals revenue. Let me just write it down here somewhere here. So the business wants to know at which point, let's say the business spent total cost. Remember, total cost is a combination of fixed cost and plus variable cost. Okay. Yeah. They want to, and then they want to know equals the revenue, total revenue. Revenue and total revenue is the same thing. Yeah. Revenue. All right. Now, the business wants to know that if they spend, let's say if they spend £20,000, £20,000, yeah, fixed cost, total cost. If the total cost is £20,000, they want to know how many units they will need to produce and sell to be able to make their £20,000 back. Okay. So equals revenue. So they want to know that, okay, if they spend £20,000 making all the computers, they want to know how many computers that we need to produce, yeah, to be able to make the £20,000 back. So this revenue here becomes a question for them. So this becomes a question, okay? This becomes a question. Yeah, they know how many it's gonna cost them, but how much, but how many units? They don't know how many units they will be producing for them to get the £20,000 back. So by calculating the break-even point, this will tell them how many units they will be producing and at what price they will be selling before they can make the £20,000 back. Okay, so where £20,000 equals revenue equals the revenue. Okay, so they want to make £20,000 back, yeah, which is £20,000. Let me just put it there for you. So they want to make £20,000 back, yeah. All right, but they don't know how many units. So the question now they're asking is how many units they will be producing. How many units of computers are to be produced and at what price before they can make the £20,000 back. £20,000 total cost back. So that is just what they are trying, that's just a question they are asking, let's say the accountant. How many units of computers are we going to be able to produce and at what price before we can make £20,000 total cost back? So that at this point, if they can make £20,000 back, they're not making any loss and they're not making any gain. Okay, so this is what they call like safety net. All right. So this question, to answer this question, they have to do something called break-even analysis. Okay. So to be able to answer this question, they need to calculate something called break-even analysis. Oh, sorry, break-even point. Break-even. This is where break-even comes in. Break-even points. So this is called break-even point. Yeah, will be calculated. Sorry, my calculated. That's it. So now we're going to have to calculate this break-even point to be able to answer that question for the business. Yeah, and every business do this. Okay, they do this before they understand, before they can make decisions in their company. They need to know how much they need to produce to make their money back. In that case, when they know this, they will know their safety net. That is knowing that they're not making any loss. So no loss, no profit. No loss. Yeah. No loss and no profit. So break-even point, we let them know it's a point whereby the business is not making any loss and it's not making any profit. So it's a safe net for them. So if they put in £20,000, they're gonna get their £20,000 back anyway, so they have nothing to lose. All right. So every business wants to know this, and they want to know at some point as well. No. Okay. Let me just leave that for now. Okay. Let me go back to analysis. All right, so this is what we're trying to do now, break-even points. Break-even point. So I'm going to read this back to you. I'm going to recap. So now the next thing we're going to have to do is to calculate the break-even point. Sometimes they call it BEP, which stands for break-even point. This is a point whereby the business is neither making a loss or making a profit. This is where the total cost of their production equals their revenue. Total cost equals revenue. Okay, this means the amount of money they received from sales is the same as the amount of money they spent on producing their products. It is called a safety net as well because they are not losing anything and they are not making any profit either. Just like I've just analyzed for you here, they're not making any loss, they're not making any profit. So now, break-even point, Becky. A break-even point is where the total cost line meets the total revenue line when a break-even graph is drawn. So to draw break-even point on the graph, we need the following figures. We need the total cost, we need the total revenue, then we need the fixed cost. Okay? So now let's do some calculations. For example, Mulaxo Limited has the following cost and revenue. Calculate break-even point and use graph to plot the BEP. All right. So now they are giving you these figures. The total cost is £12,000, revenue is £20,000, fixed cost is £8,000, variable cost per unit is £5, and the selling price per unit is £15. So now let's start first manually by calculating break-even point. So for you to be able to calculate break-even point, you need a formula. Okay, so the formula is here. This is the formula you have to follow. First and foremost, you have to break your calculation into two. Yeah, A and B. First, you calculate the contribution per unit. Contribution per unit equals selling price of a single unit of product minus variable cost of producing one unit of output. So when you know the selling price, you minus that with the variable cost of producing one unit. Probably they're going to give you this as well. Okay, so when you do this, yeah, the next one is to now work out what the break-even point is, and the formula for that is fixed cost over contribution per unit. So whatever figure you get from here will be the one you put down below here, and already you will be given the fixed cost. Okay, if you're not giving the fixed cost, usually we give you the lump sum for fixed cost. Otherwise, they might just ask you to put some figures together and calculate the fixed cost yourself, and you put it down over here as well. But the important thing is you need to understand this formula. So first and foremost, you calculate the contribution per unit. Once you know what the contribution So once you understand, sorry, what am I doing with my slide? Sorry, darling. Now, once you understand your what the number of what your contribution per unit is, then you now to put it over here, which is divided by fixed cost. So the fixed cost will be divided by contribution per unit. That's just a formula. You just need to know the formula, and you need to understand the concept. Okay. All right. Now let's see if we can put the calculations together. Let me just see what I can do to help you to do the calculation, if we can. Okay, that's it. Okay, I've put some figures here for you, just to, it's still the same figures they ask you to work on. So now I'm just gonna I've already done the calculation for you here anyway. So this is it. Contribution per unit equals selling price of a single unit of output minus variable cost of producing 1 unit of output. So they give you the selling price, which is £15 here, and they've given you the variable cost of producing 1 unit. They said it's going to cost them £5 to produce 1 computer. Yeah, and that is it. And then they want to sell 1 computer for £15. So that is it. So for you to be able to calculate the contribution per unit is £15 minus £5 gives you £10. Once you get this £10, which is the contribution per unit, you divide it by fixed cost. You can see they've already given you the fixed cost here, which is £8,000. So you put the £8,000 divided by 10, which is fixed cost, divided by contribution per unit. You're going to get 800 units of outputs. Therefore, Becky, this 800 units by which is multiplied by £15 selling price, will give you £12,000. Okay, which is the same as the total cost of £12,000. Therefore, £12,000 is the break-even point. So the break-even point in output, like that is, how many units do they have to produce to make their total cost of £12,000 back? Is 800 units. So the 800 units is called break-even output. Okay, that is an output as in unit, as in how many products would they need to produce to get £12,000 back. They will need 800 computers. Yeah, and that £800 computer has to be sold at £15 for them to get their total cost of £12,000 back. Remember, break-even point is where they want the total cost to equal their revenue. Let me go back there. Here. Break-even point is where they want the total cost to equal revenue. And I explained to you here the total cost. Let's say the total cost is £20,000. They want it to be equal to how much they're going to get back. Okay, that is the break-even point. They don't want to make a loss. They don't want to make any profit. The same way here, from the calculations we have made here, their total cost is £12,000. They need to know how many units of the computer they will be producing if they sell at £15 to get their £12,000 back. Now we've done the calculation. They're going to get 800. They have to produce 800 computers and sell it at £15 for them to be able to get the £12,000 back. So the break-even point is 800 units. Yeah, the break-even output is 800 units. That is also called the break-even point. Okay. Now, what I want to do now is let's watch a video, so that we can be able to draw the break-even graph or chart. Some people call it chart, some call it graph. Yeah, I'll call it graph. All right, because I'm old school kind of. So in my time we call it graph. Yeah, but anyway, let's just watch a video about how to actually draw break-even point on a graph. Yeah, I'm not very good at drawing it, but let me just go into someone else's video and they will teach you how, and this man will teach you how to draw it on the graph. Okay, so what we want to draw when it's your time to draw, we're going to have to draw this 800 units on the graph, the break-even point, given this information: total cost, total revenue, fixed cost. Yeah, so when you're drawing the graph for break-even point, the numbers you need, or the figures you need, will be the total cost, the revenue cost, and the fixed cost. That's all you need, honestly. But if you had already calculated your break-even point like manually like this, you can as well use the break-even output to draw the graph. Okay, but let's go and let's see how this man can teach us how to draw break-even chart or graph.
Welcome. In this video, I'll be constructing a break-even chart using the given information. First, we'll find the break-even point in units by dividing the fixed cost by the contribution margin, and that gives 45.
So he's now done contribution per unit. Like I showed you earlier on, contribution per unit. This is what the guy has just, within 1 second calculated for you here. Yeah, so contribution per unit is 60 minus 25, which is selling price minus variable cost. Remember, in the formula I gave you, contribution per unit is selling price minus the variable cost per unit. Okay, so this is the variable cost per unit. Yeah, variable cost. And so, okay, let's continue.
The break-even point in dollars can now be found by calculating total revenue at break-even, and that gives 2,700. To construct the graph, we plot units on the horizontal axis and dollars on the vertical. Now suppose for units we have a capacity of say 110, then we can go as far as maybe 120. As far as we capture the break-even unit.
So what it's trying to say invariably is you have to put the numbers of output here on this axis here. Yeah, unit here, and your revenue your revenue will be here, and the cost. Anything that is monetary terms will be on this side. Anything that is in unit will be on this side. Okay, to be able to draw the graph.
Of 45 centrally. And for dollars, I can do 1,000 per unit here to ensure the break-even dollars of 2,700 is captured.
So now, from your own calculation that you did earlier on, is 800 units that we did. Okay, so that 800 unit is, in its own case, is 45. So yours is 800 from that calculation. So you put the 800 pounds here, unit here, and then you align it with your fixed cost. Okay. So, sorry, what am I even saying now? Is it with the fixed cost? I think I'm getting it wrong here. Sorry, darling.
So the break-even point here.
Sorry, dear. So it's the break-even point in your own one is 800 pounds, yeah, and then what is done here is the total cost. So which is the combination of the variable cost and the fixed cost. So that's what is plotting here. So your total cost here, yeah, you align it with the 800 units, yeah, 800 units that you calculated earlier on. I can't remember what your own total cost is, but we can go back later. But let's keep listening to what the guy has got to say. I'm just gonna rewind this a bit. Let's start all over again. I want him to start from the beginning. Okay.
Now suppose for units we have a capacity of say 110, then we can go as far as maybe 120. As far as we capture the break-even unit of 45 centrally. And for dollars, I can do 1,000 per unit here to ensure the break-even dollars of 2,700 is captured. So the break-even point here is 45 and 2,700. Now the fixed cost is the same for any volume of production, so we draw a horizontal line for fixed cost here at 1575. For the total revenue function, we know that if we sell 0 units, total revenue will be 0. So total revenue line is satisfied by 0, 0, and we pass through the break-even point. For total cost, when 0 units is purchased, then total cost equals fixed cost. So the total cost line will start at fixed cost here and pass through the break-even point. Now, before breaking even, the total cost is higher than total revenue. So this region here constitutes losses. And after breaking even, total revenue is greater than total cost. So this region constitutes profit. And that's it. Thanks for watching.
Okay, you can see now, Becky, that by drawing this graph, you can see how much loss the company is making and how much profit they're making as well. Okay, and this is the breaking point. Breaking point is here. All right, so this is at the point at which the total revenue equals the total cost. All right, and this is where the losses are and this is where the profits are. The reason why they're making a loss is because the total cost they're spending is more than the amount of revenue they are receiving in. And then here, the amount they have spent, or the amount they've received in revenue, is higher than the total cost, that is the amount they've spent. So this is all about the graph. All right, I just want to rewind it again. I want you to see one more time from the beginning how the guy is done it, because you're going to be doing the same thing on your in your homework that I'm going to give you. Okay,
this video, I'll be constructing a break-even chart using the given information. First, we find the break-even point in units by dividing the fixed cost by the contribution margin, and that gives 45. The break-even point in dollars can now be found by calculating total revenue at break-even, and that gives 2,700. To construct the graph, we plot units on the horizontal axis and dollars on the vertical. Now suppose for units we have a capacity of say 110, then we can go as far as maybe 120. As far as we capture the break-even unit of 45 centrally. And for dollars, I can do 1,000 per unit here to ensure the break-even dollars of 2,700 is captured. So the break-even point here is 45 and 2,700. Now the fixed cost is the same for any volume of production, so we draw a horizontal line for fixed cost here at 1575. For the total revenue function, we know that if we sell 0 units, total revenue will be 0. So total revenue line is satisfied by 0, 0, and we pass through the break-even point. For total cost, when 0 units is purchased, then total cost equals fixed cost. So the total cost line will start at fixed cost here and pass through the break-even point. Now, before breaking even, the total cost is higher than total revenue. So this region here constitutes losses. And after breaking even, total revenue is greater than total cost. So this region constitutes profit. And that's it. Thanks for watching.
so now, before the company was able to break even, they were making a loss before. Okay, so because break even point is where they don't make loss and they don't make any gain. That is where the total cost equals the total revenue. Okay, no loss, no profit. But before this point, they were making a loss, and after this point, they're making profit. Okay, all right, then let's go. So Becky, now what I want us to do is we now need to place these figures on the graph so that we can see the break-even point showing the I think it's 800 units. I believe we need to see the 800, not 8,000 units, 800 units of output. Okay, you only need to use 4 figures to draw the graph, and the figures are the total cost, total revenue, fixed cost £8,000, break-even point, break-even output 800 units. So here I meant 800 units, so just help me to make that one 800 units. 800 units, just change that to 800. Okay, anyway, I don't think I'm able to do it anyway. Now, so I want you to use this as an homework for me. Yeah, I want you to go and draw the graph using these details here, these figures. Draw this graph, send them to my email, then we take it from there. All right. Now, for common exam questions regarding revenue, cost, profits, and break-even analysis, these are the kind of questions you will be meeting in the exams, and you need to be well prepared for them. For the next video, before the next video, I want you to go through these questions, answer these questions, okay? And then in the next video, I'm gonna be going through your work and see what you've done, and we're gonna be doing calculation together wherever I say how much you know, how much you've done, and then we'll be able to actually come on the video and do this together. Okay, so these are the questions. There are 9 questions all together. Yeah. So, and I don't need to read them out to you, just read them yourselves and give me the answers and send the answers to my email address. But for the next video, we're going to start from these questions. We're going to do the calculation together and see where you are at. Okay. Now, okay. So we're nearly done now. So the keywords or key terms for today are revenue, price, sales, cost, fixed cost, variable cost, total revenue, profit, loss, break-even output, break-even point, break-even chart, contribution per unit. So in some areas we've used the word break-even output. That is how many units. Here, sometimes we use break-even point. It's still the same thing as break-even output. Okay, so you need to understand all these keywords. When you do understand these keywords and how each one of them are to be calculated or are being calculated, then that means you've understood today's lesson. If you can't calculate any of these keywords, yeah, if you don't know how to calculate them, that means you have not learned anything in this lesson. So that is the tip. That is how you know that you know what you need to know. All right, Becky. Now, for the next video, we're gonna continue with the break-even analysis with more calculations, as well as how changes in costs and prices could affect the break-even outputs. So it's not rocket science, like I always tell you. It's just simple. We're gonna go through this just to find out, like, when cost or prices changes, if the cost goes down or up, or price or selling prices go up or comes down, how do they affect the break-even output? Yeah, so that's what we're going to be doing next video. And apart from going through all these questions that you need to go through, if you don't understand any of this aspect, please do grab me at home or send me an email or grab me in the kitchen, wherever, and let's just talk about it, okay, before the next lesson. All right, so Becky, that is for today's lesson. Mommy loves you so much, and I wish you good luck in your exam. No stress, don't get yourself stressed. You always have to know you have to sleep well, eat well, organize yourself, have your timetable ready, and make sure that you follow your timetable. Okay, when you do that, you're ready to go, you're good to go, and keep learning. When you're taught anything, try to have a deep breath, think about it, put yourself in the shoes of the business people, the entrepreneurs, or imagine you're the one doing the business. Okay, that's the best way to learn. Imagine you're the one doing the business, or you're just the one to advise the entrepreneurs on how to do their business. All right, when you do that, then you will enjoy business studies. All right, so that's just about it, Becky. So Take care for now, and I'll see you when I see you when you come back from school, maybe. All right? And that's it. Enjoy. Bye for now, Becky. And for all those that have been following this program, many times for watching. Thank you for watching my program. If you do enjoy what you've learned today, or if you've learned anything, or if you have not, do let me know. You can leave me a message down below in the comment box on my channel, and I'll be happy to respond to you. And if you think you need any personal help from me with business studies, that would be nice. I will be happy to help you if you need any more help. And that's just it for today. Thank you for watching. My name is Princess Dammy. You're watching me from MTM Studio in London. Thanks for watching. God bless.